Mark Cuban is known as a big name in the investing game. His moves are usually followed by new enthusiasts who want to profit from the market fast. On today's video, I'm featuring some stocks that Mark Cuban has shown interest for, and some of them even owns on his portfolio. Number 1. Netflix. If you didn't know, Mark Cuban owns more shares on Netflix than any other stock he owns. Even why the company didn't leave the investors happy at the end of 2020, as the company posted a quiet 2020 report that caused many critics to say negative things about it. Net subs disappointed investors with only 2.2 million additions, as many people speculate that Netflix isn't benefiting from prolonged lockdowns across the world. Many governments lifted mandatory lockdown orders, thus driving more people outside while spending less time watching movies and TV at home. As Newton's third law states that every action requires an equal and opposite reaction. When Netflix gained a ton of subs in the first and second quarter due to lockdowns, then people should already expect third and fourth quarter to be lower since lockdowns get lifted. But there is no need to freak out. Netflix's business model delivers predictable, recurring revenue from subscribers from all over the world. While the market panicked and sold off the stock, I still find it an extremely attractive investment due to the predictability of revenue and earnings. There are few companies as consistent and predictable as Netflix. Netflix also has a lot of loyal subscribers who don't imagine themselves canceling their subscriptions anytime soon. I am personally one of those subscribers since years ago. It's the perfect outlet for winding down your day at home, plus provides a much-needed escape from the current tragedies in the world. While other competitors have raced to the streaming market, Netflix follows the slow and steady model when it comes to growth. Management focuses on its customers and implemented a top 10 ranking this year within the app, so users can find the most popular content even faster. Not to mention, Netflix has the most diverse content library in the world, with movies and TV shows in many foreign languages like Spanish, French, Chinese, Korean, Hindu, and a lot more. Netflix added a total of 28.1 million subs in the first 9 months of 2020. That's more than 27.8 million in all of 2019. With the COVID-19 closures, free cash flow improved during 2020 as Netflix was forced to cut spending on new content. While growth has slowed due to increased competition, Netflix steadily grows subs and revenue in its most important region quarter over quarter. The company added at least 20 million subs annually over the last 4 years and is projected to hit 50 million net subscribers in 2021. In my opinion, Netflix remains a highly profitable company with a strong brand. Netflix stock is up over 40,000% since 2002, which is a huge testament to its loyal customer base. Number 2. Even why you should have invested in Amazon a long time ago, like Mark Cuban did. It has still demonstrated an uncanny ability to report spectacular growth rates, considering its size, making it a natural addition to our list of the best growth stocks to buy in 2021. For several years, Amazon refused to be profitable, preferring to increase its market share by leveraging razor-thin margins and reinvesting every dollar in long-term investments. Amazon remains a glorious tale of margin expansion combined with rapid top-line growth as we head into 2021. Amazon's international division just became profitable in 2020, and the company's 37% growth rate last quarter is impressive for a company with $348 billion in trailing revenue. Amazon is currently planning its own mental health care service sector, which it would sell to large employers in order to disrupt the other sections of the economy. Amazon has its sights set on the prize, with healthcare spending account for more than 17% of the U.S. economy. Number 3. Because of the gold crisis on the market, Torex Gold has been dragged down in the turbulence, despite an incredible year for the company, with $168 million in free cash flow and 45% plus all-in sustaining cost margins. It's worth noting that this performance was achieved despite significant market decrease from COVID-19, making the achievements even more impressive. Based on a strong outlook for 2021 and its strong balance sheet, I see the valuation as very compelling. Torex Gold continues to be one of the most undervalued producers in the sector. From a free cash flow standpoint, Torex is trading at less than 6 times free cash flow, with FY 2020 free cash flow of $168.1 million and an enterprise value of $918 million. From a gold reserve standpoint, Torex Gold is valued at a mere $324.38 per ounce, based on a 2.83 million ounce reserve base. However, this calculation excludes any resources and the significant resource at Media Luna. Even if we completely ignore the 4.6 million ounces of inferred resources at Media Luna and place a value of just $100 per ounce on the indicated resource of 2.24 million ounces, this drops the valuation per reserve ounce down to $245.22. This is a dirt cheap valuation for a producer with 40% plus margins. Number 4. Lucid Motors. Lucid is not only one of the most promising electric vehicle startups. After weeks of speculation, the company confirmed on Monday night that it will merge with a special purpose acquisition company that goes by the name of Churchill Capital, a deal that will be public by the end of June. The reason Lucid may outperform the market is just because of this deal. Lucid is one of the most promising new companies in the space. Lucid Motors should be mentioned, a company that has a strong balance sheet following its deal with Churchill Capital 4, and that has a very strong EV model coming to the market soon. Some of the specs of the Lucid Air include 1,080 horsepower, 520 miles of range once fully charged, and ultra-fast 900-volt charging. With a package like that coming to consumers in 2021, it is safe to say that demand for Lucid Air and Lucid stock should both skyrocket and give high profits by the end of 2021. Number 5. Lithia Motors has more than tripled in price over the past year. The longer-term performance has also been not less than stellar. This car dealership might not be an exciting tech company, but that shouldn't put you off. I've been keeping this company on my watch list, and to be honest, I wish I've spotted it earlier. This is because even after the run-up in 2020, Lithia Motors is still a buy at these current prices. The share price was $14.50 10 years ago, and is now sitting at $370, so Lithia can already be called a multi-bagger. Operating income has grown from $112.2 million at the end of 2011 to $708.1 million at the end of last year, an increase of about 630%. Lithia Motors is, in my opinion, one of the most interesting plays when it comes to listed car dealers. Its acquisitive growth works under the current management, and that has brought great gains for shareholders. Something to like is that the balance sheet isn't extended to its maximum during these buying sprees, and the cash generation of the business is excellent. The company is not without risks, and it doesn't have a big moat, but still it looks attractive at its current valuation. Even after last year's run-up, Lithia Motors is still a buy. Number 6. Microsoft Corporation is a multinational technology company that develops and sells software products and hardware devices across various market segments. The company has a wide range of software products, such as operating systems, cross-device productivity applications, server applications, business solution applications, desktop and server management tools, software development tools, and video games. On top of that, it also designs and sells PCs, tablets, gaming consoles. Microsoft is a leading tech multinational with an incredible track record to execute its strategy to establish a strong market leadership and expand across key high-growth market segments. Already dominant in office productivity software and operating systems, the company is well positioned to strengthen its market leadership in cloud computing, with Microsoft Azure's growth outpacing Amazon. Reaching parity in market share would be a major win for the company, as it benefits from the migration to cloud-based workloads. Also, it is expected to remain dominant, with Office 365 and Windows 10 proving to be highly successful software, and overall remain its main growth engine. On top of that, it has a diverse range of products and services spanning across gaming, search engines, social networking, and more, which enhances the Microsoft ecosystem and provides unique integration potential to improve user experiences. It also provides diversification benefits to its revenue streams. After a sharp decline in IT spending by enterprises last year, Microsoft has a lot to look up to in 2021 on an anticipated strong recovery in IT spending as businesses return to a trend of digitization and migration to cloud, providing Microsoft a major tailwind. I highly suggest Microsoft stock to be part of your portfolio. The information displayed on this video may not come out as expected, and this is why I also always encourage people to do their own research as well before investing. But by doing my research, I came out in this conclusion. What do you think of the stocks listed above? Do you take Mark Cuban's investing moves for granted every time? Which one of these stocks did you find the most profitable? Make sure to let me know in the comments section down below. Before leaving, don't forget to like, subscribe, and hit the bell button for notifications on our future content.